All right, good morning, everyone. It's let's see, Wednesday, October 22nd. Usually we do weekly market recaps. That doesn't seem like it's enough. And so we'll just get right into it. Yesterday we saw gold down over $200. Saw something on social media, which I didn't have time to really look into. Apparently, it's a four sigma move. Well, I don't know if you know anything about that, but regardless, we have James, our market analyst at SD Bullion, on to kind of talk about what we're seeing, a little bit about why it's happening, what it means. So, James, I'll go ahead and turn it over to you. Let's describe the price action that's happened. We've seen sharp moves in gold and silver lately. We've seen it for the last several months. What's really driving all this volatility?
So the volatility is mainly being driven at the moment by mechanics that do discover the what you see as the spot price. Those mechanics are mostly derivatives. They're mostly futures market trading and different things that machinations that are happening between London and the COMEX and Shanghai. Those are the three main markets that project what we look at day in day out and call spot price.
Hmm.
Year to date, gold has done extremely well. It's up, I think, 55% year to date. Silver 63%. It was up over 80% for a little bit until this recent sell off. So they're getting into that second toward the end of the second part of the mania, and mania phase is probably a little later on down the line. But we're at the point now where silver is going to start getting positive headlines. You get silver beyond the $55 an ounce range. And I think the narrative's going to change for silver. I think you're going to start seeing headlines talking about how it's a critical metal for all the things that we need. There'll be much more positive reinforcement in the sense that silver is important for all the things that we want in terms of our future being better than the present, right? And so at the moment, it's battling that $50 line is super important. That's kind of like the old 2000 line for gold. We fought for 3 years roughly, up and down through that 2000 level, and it built a really nice base. And we launched from 2000 to well over 4,000 now. And silver is building that base, and I think 50 is the launch pad. Now, obviously, we dropped below 50 overnight and over these last few nights. And, I'm sure people out there are kind of wondering, thinking, oh no, is this going to be a repeat of something we've seen before in silver? I'm here to tell you it's not. We're literally in a place of verifiable shortage. 1,000 ounce bars are in premium right now, and London has real difficulty sourcing them, and I'm pretty sure they're cooked. I mean, that's the bottom line. That's how the kids put it. I'm pretty sure in the long haul they're cooked. That's basically it.
Cooked literally,
Yeah.
because everything's being melted and they still have contracts against all that stuff. I mean, we see these big price swings that, to be honest, are completely uncoupled from what we see on physical demand right now. So you mentioned there's, of course, the U.S. market, New York, the COMEX, and there's the LBMA, and then we have Shanghai in the Asian markets. Each one of them seems to have a different, naturally their trading hours are different, but they have a different impact on actual price. And so gold run down we saw yesterday was seemingly a US Open. And then we've seen other traditionally big price moves kind of outside of normal trading hours in the US. I guess how would you compare and contrast that and kind of summarize it all for people?
So they have different dynamics. Like I look over at Shanghai. You have the Shanghai Futures Exchange, which of late has been, adding some gold. You've probably seen charts on social media of like a vertical stick going up in Shanghai Futures Exchange gold warehouse. But they're like a pipsqueak in the gold market in China. Really, it's the Shanghai Gold Exchange that matters most. The
Yeah.
Shanghai Gold Exchange is the final boss in gold, and I think ultimately it's going to emerge as the final boss in gold as this revaluation process continues in the next decade or so. You have a situation on the Shanghai Futures Exchange and the Shanghai Gold Exchange. Their inventory levels of silver 1,000 ounce bars have been precipitously dropping since 2021. You look at the charts, it basically went up and now it's coming down. And so you're seeing a fact that China is running out of these 1,000 ounce bars. COMEX has been going down a little bit, but the amount that's going to be available, unless lease rates scream to the moon, it's coming out in dribs and drabs, but it's not going to be enough, I don't think. You have a situation now where London is starting, where India is starting to understand the situation as well. And that's just going to feed on itself. Once people get in their lizard brains that they have to have silver, they're going to get silver one way or another, and they'll pay through the eye. And when they know that gold's already done what it's done and they think silver will do the same, they're going to actually put money down and pay through the eye to get it. And that's what we're seeing worldwide, basically. But India is they're the second biggest, most important market in silver.
Yeah. So these paper price prices being pulled down, is this as simple as larger institutions doing that with paper mechanisms
Yeah,
to
I
then
believe
what
so.
cover shorts?
Yeah, I believe so. To go out in the market and get metal as cheap as possible. And I'll show you. When I can share my screen, we'll go
Yeah,
through
let's do it.
some of this stuff. Let's go to gold first. Gold is the mama. It's the one that's most important to follow, at least for now. All right, this is gold. In the last few years. Obviously, year to date, it's up a pretty good amount. This is the beginning of 2025, where my mouse is hovering. We've gone up, and it's changed the progression of like the ascent has changed, so it's gotten even more vertical. And obviously, we pulled back a pretty good bit. But keep it in perspective. I know like a drop of 201 days sounds crazy, and I know a Four Sigma event is something that shouldn't happen, and it wouldn't happen if we didn't have such fake markets. But that's the market you're in. All right. I mean, at some point, that stuff's not going to work that well, and it's going to get even crazier. But you're going to see dramatic moves because on a percentage basis, the numbers nominally they just look gigantic. I mean,
Hmm.
it's only a few percentage points, but nominally 200 an ounce in gold moving that quickly seems crazy.
Hmm.
In terms of like where we are, I think we'll probably dip maybe below the 4,000 nominal, and we'll see, where the support is. If we go down, I think the 50 days like 3,700. I don't think this is a 200-day fall. 200 days, maybe 3,300 roughly. But we'll see, how far this will go and how long we can, if this is going to be something where we move sideways for the remainder of the year, or do we find a new all-time high again before the year ends? That's a question that I cannot answer, but it could go either way depending.
Yeah. So what's the 200-day data point that you referenced that in the past? Just
Yeah,
remind people.
sure. In bullion bull markets, what generally happens is you have the 200-day kind of swings below as the price is climbing, and a lot of times it gaps out pretty wide. And right now, it had gapped out by 1,000 an ounce, which is pretty
Hmm.
exuberant. That on a percentage basis, when you get to 30-40% over the 200-day moving average, historically in a bullion bull market, that's generally when you really want to back off the sauce and take it easy on going long, and keep your powder dry for when it comes back a bit. So the 200-day I think is just under 3,300 right now, but it's rising every day that we go along. The average
Hmm.
keeps climbing. And
Sure.
so, yeah, that's the point, is that, the 50-day will be support, the 100-day may be support, the 200-day, those are all important numbers to kind of keep an eye on.
Yeah. So you're of the opinion that gold is going to test. I mean, we're looking at it. It's down. It's almost at 4,000. The futures,
Mm-hmm.
at least at the time of this recording, it's at 40.30.
Yep.
So you think there's, based off the 200-day, that
Mm-hmm.
there's more downside testing opportunity
Yeah,
theoretically.
there's theoretically a possibility that it'll go below
Yeah.
4,000 and be trading in a range in the high 3,000s, I think. For it to go lower than that, if it starts going lower than that, you know what I'm doing? I'm picking up the phone, I'm calling up my family, I'm saying it's time, this is the moment, this is it, let's go.
Yeah.
This is it. This is the last time I'm going to bother you on this. And that's literally what
It's the
I'm doing.
last time you're going to hear from me. You got to do it. This is
Yeah.
the last word.
Yeah.
Yeah, makes total sense.
Yeah.
Okay, so go through some other charts that you have
Yeah,
here for
sure.
us.
We got silver as well. Obviously, this is the last few years, right? Silver, we remember the depressing era and the 2023 times where we were in the mid 20s in spot and just kind of gyrating sideways. Obviously, this year it's gone up very well. I think, from the beginning of the year to up 54.47, which is the new nominal price side, that's over an 80% move on the year. So of course it needs some time to kind of back off and consolidate these gains. And again, the $50 range, like this support, we need to
Hmm.
eventually after we've done some consolidating on here, we need to get back up to this 50. We need to cut through it, and we need to clear 55 so we can start marching toward the 70s. The 60s. That area is where we're going to go
Hmm.
once we kind of start clearing it and moving.
Hmm. Makes
Uh,
sense.
yeah. And the other thing is like the downside range, like there was a gap that between 39 and 40, and we just pretty much took off from 39 to where we went to with this nominal price high, right? And if you look at the charts, when there's a gap like that, a bar gap from 39 to 40, generally you have to back up and fill that. So I'm not going to like freak out if I see silver go all the way down and spike at like a below 30 for a second, right? Just to fill that gap. That is a possibility. That's just something I want to throw out there because
Below 30.
no, not below 30, below 40 on a
Okay.
spot basis. That doesn't
Okay.
mean the bullion market, if that happens, the premiums are going to be gapped out anyway. So it's like
Yep.
you can't wait for that to think that you're going to take advantage of it, because a lot of the bullion products will be unfindable on a 40M. The premiums will be gapped out. So if you can get silver bullion in the 40s, like go for it. You know, that's the point. Anything below 50, I think long term is great store value. So you know, don't sit there and try and catch knives. So you're going to have you might not even get any bullion product if you do that because of the amount of people buying this at this moment.
Yeah, I mean, yesterday was, of course, what, Tuesday the 21st. We saw the gold back $220 at one point. Silver was down $4 an ounce.
Mm-hmm.
Huge demand day. People that are paying attention to premiums obviously are seeing the premiums change overnight. Every major event is backed up, and that's not going to change anytime soon. We now, as of the time of this recording, are kind of struggling to get offers on kilo gold bars, which are for much of the industry, that's kind of the backbone of physical gold trading for
Mm-hmm.
institutions at least,
Yeah.
which is pretty alarming. And then the entire 1,000 ounce silver bar market has changed where it's more expensive, less available. Again, points to actual, pending supply issues. We'll see if that continues to play itself out. But what I'm hearing you say um, is that these pullbacks are typical in any sort of certainly physical spot or
Mm-hmm.
bull market, and it's I guess to be expected.
Yeah, oh yeah. I mean, it's look, in a bullion bull market, it's not going up in a straight line. There's going to be gyrations up and down. So the key is, you know, buy on price dips, especially if they're very drastic. You definitely need to always save some dry powder if you're dollar cost averaging into the market.
Mhm.
So you want to wait for these types of moments where there's weakness in spot prices. But the fundamentals are such that I think the world is changing. We are going into what I think is a global bullion bull market mania eventually. And that's probably going to extend in the next decade, into the 2030s. We'll probably have a good run here in this decade, and then there will be some sideways consolidating. And we'll go through that in the last chart, what I'm explaining here.
Yeah, please, let's get into it.
Okay, so this is on the left-hand side, just an article that came out in Bloomberg. You know, the headline was insane. Obviously, I threw a funny meme picture in there just to have a little fun with it. But, you know, sold out in India, panic in London, how the silver market broke. My contention is that India, the silver demand in their ETFs is really what broke London down. There was a recent 20 million ounce inflow into their ETFs. They called up the London desks recently, probably trying to add more. And London told them, sorry, guys, we got no 1,000 ounce bars for you. And so that word just spread and it's just gone crazy. So you have a situation now where London is literally rolling up to the LBMA desk and LBMA is just like, nah, mates, we can't deliver the 1,000 ounce bars. We're going to try, you know, we'll jack up lease rates and run around in the world and try and pull it in here. But, you know, no 1,000 ounce bars for now. So that's what happened. You have a situation as well where I've been monitoring this stuff overnight. A lot of times I was actually on a space call, like with a bunch of people. There's like a Twitter X space that we were on. And this started happening. You basically have, it seems like they're coming in now when they want to smash price. The hours that they're doing it is generally at the end, the close of Hong Kong, during New York Globex hours, and the beginning of London trading, right? Here's the beginning of London trading, literally. Like you can see the box where it starts and what is happening, right? Like London starts and then they come in and smash, okay? And so this is the drop that got us below 50, and obviously we're now percolating around 48. You know, we'll see how long the shorts are in control. I think ultimately silver is something, it's not going to be a sideways grind like gold was at 2000s. Silver is much more of a snapback V type of shape. It generally will go up and down and do these V-shaped moves. When you look at the charts, like let's go back to that one real fast. I mean, you can see how sharp and spiky it is. Like that's these crazy spike moves. And so, yeah, for it to snap back, come all the way down to say even somewhere in here, that is a possibility. And then kind of percolate and then try and go beyond 55. Whether it happens this year and or at the beginning of next year, we'll see.
Great point. And I think you had one last chart.
Yeah, the final one is just the bigger picture. Like this is the bigger picture in my thesis about silver in the United States financial history. This chart literally, I know it's a little hard because the data on the left-hand side is a little skewed. Well, not skewed, but it's kind of thin data because it literally starts from 1800 and it goes all the way to the 1960s when the London gold pool failed. So we're looking at this number one here. There's actually a spike, you know, after the U.S. Civil War where silver ran up. There's like a little green dot up here. Silver got to 330 an ounce in 1869 in Black Friday. There's a long history about why that occurred. There's a conspiracy theories as to why it happened. But ultimately, when you go and look at the actual data, what happened was you had frenetic longs and in naked shorts, basically frenetic longs that just kept buying gold, and it drove the price threefold in a short order. And silver obviously did it as well. It's the end of 1869. What followed that was by 1873, the crime of 1873, where they demonetized silver. So you went into this situation in 1873 where they basically consolidated on the Western world in the United States, the west of the United States. All the bankers in the East kind of colluded with London, and they basically threw silver out of the game, and then they basically bought up everything for pennies on the dollar. It was essentially a great taking for like almost a century. So silver was suppressed more or less in this phase one. Then you have London gold pool breaks here. It blows up, and so silver doubles very quickly, and then it goes down, retests all the way down to there, and that's the phase two, this little cup. It breaks out in the early 70s after Nixon cuts ties, and here we are in cup three. And then obviously after cup three, it went from like $4 roughly to over 50 in the scapegoated Hunt Brothers situation, which is a complete anomaly because Hunt Brothers weren't trading gold, they weren't trading platinum, they weren't trading palladium,
Yeah.
trading oil, all those things multifolded. So that's a complete fallacy to think that they were the ones that actually did this. That was happening in virtually every commodity you could name. So we go back. Now this is a progression. It's a 1, 2, 3 progression. This is generally, we got suppression 1, 2, 3, boom, a mania phase, and we're building the 1, 2, 3 step again. This is from 1980 to 2011 up here. That is the one cup. And here we are, 2011 to recently now, where we busted through the 50th. This is the 2 cup. This is the terrible 2010s. And then, now we're in the mid 2025 era. And so we're going to probably run up double very quickly. I think we're going triple digit on this run to get to the next cup 3. Whether it consolidates in the triple digit area or it goes down and consolidates, here, I don't know. That's hard to say. But ultimately, you could do projections from here to here, but you're forcing you can do projections from here to here and try and force the past on the future. I wouldn't do that. I would suggest wait and see. Triple digit is kind of the, gold has already doubled from the 2000 level. So you have a situation where silver, if it's going to match what gold's already done, it needs to double its spot price. So it's just a simple math equation. The fact that triple digits is destiny, I think. So my contention is, yes, the third cup will be way up here above 100. I don't know whether or not it'll fall below 100 and we'll consolidate for a while, but that's not the mania phase. The mania phase is later on where it does multiples from triple digits or near triple digits. And so that's how you get $300, $400, $500, $600 silver in the future in the 2030s, because we are going to be sitting there writing off as best we can the massive record debt levels that we have, the massive unfunded liabilities that we have. We cannot keep those. We cannot pay those off in real terms. The only way that the governments get out of that historically is to devalue the currency. And so, silver and gold are going to precipitously, as time goes along, reaccount and revalue themselves sharply against virtually anything you can name, any asset class, anything. They are going to sharply revalue. And that is the point here. So you need to keep a long-term view. This is not a day trade. Do not do day trading in gold and silver. You will get your head handed to you very quickly. You are not a bank. You are up against some of the craziest people in the world in terms of trading. So I would suggest keep a long view. And, the Hunt brothers didn't listen to their own advice. Literally, Lamar Hunt, in an interview, I have a recording of him saying, if you buy silver in cash and you own bullion and you got a long view, you'll do just fine. And he didn't listen to his own advice. He got over levered long in the COMEX, and he didn't read the rule book and the fact that they can stop things. So that's more or less how that entire situation fell apart. But the point is, if you're buying bullion with the long view, and you're holding it securely and smart and intelligently, and you kind of understand the bigger picture at play, you'll be fine. And just buy on dip. That's the concept.
Yeah. Well, excellent summary. Obviously, the paper market far outsizes the physical market, so a short-term pullback, while it can be a little bit of a bucket of cold water on your head if you're an investor, or a stacker, if you take a step back, it's actually completely normal. It's expected, and it represents a little bit of an opportunity. And yeah, I mean, if this is not market mania, if we have that coming, then kind of shudder to think about how
Yeah,
little sleep the entire vault
look,
and phone team is going to get.
It's the same thing. Like if you go back to the 1860s and read the historic record, like the U.S. Congress had like a hearing on it, and they would have the gold panic investigation, and they would think they called paper gold or derivative gold phantom gold back then, and they would answer things like phantom gold can't stand the weight of the real stuff. They would say, we weren't in trouble because we knew that we had Wall Street covered. We were buying Wall Street, but all they had Wall Street's phantom gold. So basically, we're going to a place in the future where bullion is going to be virtually impossible to find. And the spot prices that you see will probably be a derivative of levered phantom longs who are going to end up winning in the long haul against the naked shorts and in the levered complex that we are in. This is just a louder, more obnoxious worldwide event as opposed to like a small panic of gold in the 1860s in New York.
Yeah. All right. Well, thanks for your time, James. Ton of volatility, like we said at open. Appreciate the context and the perspective. It's certainly a little bit helpful as you kind of sit there and evaluate where can it go? What does a pullback mean now? What does it mean in the future? And why would I be wanting to buy with confidence? So I think you helped quite a bit. Appreciate your time.
Yeah, Cole, thanks for having me on. Always good.